Thank you, everyone. It's a great pleasure to be here. Having listened to Finland and Norway's experience, I realized that there are a lot of similarities in what you're about to see. And I think that is important because as I started on the journey of public infrastructure way back towards the late 1990s, we have come a long way. I remember at that time, the reason I started that was because Hong Kong towards 99, 2000 was drafting the Electronic Transactions Ordinance, the e-signature law. And to support that need to be an infrastructure and the related regulatory framework to make it work. So I started the PKI journey about that time. And interestingly, in the early days, people talk about cost, people talk about convenience of use, and you know, even to today, these were some of the topics that people are discussing. With the advance in technology, mobile, it really changes the entire, you know, the entire kind of a space that we live in, and people are becoming more and more kind of familiar and accepting to use you know, different devices, and so we are seeing a lot of different kind of innovation in this particular area, and what I'm about to share with you is actually very simply two developments in Hong Kong and in China. One is the e-Cheque, which is a Hong Kong innovation, and the other one is eID, which is a mainland China solution. And the two combined together is now making some very interesting changes in our society. So let me just share with you some of the specifics. First of all, the e-Cheque. Now, what is it? It was actually launched in 2015. It wasn't that long ago. We are coming up to the 1-year mark. It was actually a digitally signed PDF file. And you would say, well, that's not digital, it's PDF. But it actually does have some very interesting components to that. The PDF resembles a normal check that you are familiar with, except that it is digitally signed. It has the same legal status as a physical check. Now, the law has been modified to make that happen. So we actually went through a slight amendment in the corresponding legislation to make that work. It's not negotiable transferable. Now, that is a slight difference to your normal check. Normally, a check is a bearer document, and you can actually, kind of transfer by having the proper kind of signatures and so on. But in the case of the e-check, it is not transferable. So equivalent of you crossing your check and marking down accounts payee, it has the same effect, but this is default, not transferable. It can be forward dated, but not backdated. It is valid for 6 months, so it's the same as a normal check. It has to be addressed to a payee and deposited with a bank accepting e-checks. Now, right now, as you will see later, there are 10 banks in Hong Kong that has this service for depositing, lodging an e-check, and it can be used to make Hong Kong dollar, US dollar, and renminbi payment. So it's multi-currency, and you can actually, as you receive it, you can make use of the bank's own website or the Hong Kong ICL, which is the clearing company, Hong Kong Interbank Clearing Limited, and using their service to deposit your check. Earlier, we listened to the two cases in the Nordic countries, and one of the common theme was, you have to use it, you have to, taste your own medicine. And so the banks, all the participating banks, have on their website a special page dedicated to the issuance and the receiving of e-Cheque with guidance and video clips to tell the users, their customers, how to use that. On the internet banking website, they have a link for that particular service. So what are the benefits and what it's trying to do? Now, if you use protection in terms of security, most banks, I would say, requires the users to pass through a two-factor authentication before they can actually issue the e-Cheque. They get all the signing done. The issuing bank kept a full record of all the transactions, and therefore, given that they know how many checks are being generated, it is easier for them to trace and track and look out for approvals. The adoption of PKI helps to prevent tampering, and that actually is built on top of the existing Hong Kong PKI infrastructure. We had that in place towards in 2000. And so that has been something that has been around for a long, long time. The centralized deposit checking mechanism avoid multiple deposits, and that's very important. One of the current another innovation, blockchain. We are saying using technology we avoid double spending, and this is exactly the same thing. By having a common depository, you actually avoid the same PDF document. After all, it is a PDF document, an image to be drawn multiple times. So that is a protection mechanism to ensure that the e-Cheques are doing what is intended to do. What are the benefits? Ease of use. Mobile phones, internet banking accounts can easily generate the e-Cheque. Is making it life very simple for the person who wants to make the payment. In terms of clearings and settlement, right now it's T+1. You write a check, you issue the check the same day, you lodge it, you drop it into, you send it by email or social media. You can forward that image to the recipient. The recipient, upon receipt, can lodge it immediately, via one of the web services, either through his or her own bank or through central clearing. And the moment that it's done, it can be cleared the same day, and payment will be effected the following day. So that's a very convenient mechanism. I remember when I used to receive physical checks, sometimes, I'm busy and I don't actually deposit that check, take it to a bank for several days, there were the odd occasion that I forgot about it, and the check expired. So making that very simple. Now, I think that the third one is actually probably the most important aspect, because today, if you want someone to pay you, you actually have to give that person your bank account details, name, the branch, the bank's name, your account number, and a lot of details, depending on which country you are. That set of information can be quite a lot, and you have to give away that. But with checks, you don't. All they need is, some of the basic information, your name, and you can actually deposit it into your own account. So that, from that perspective, it protects personal information to a greater extent. So those were the benefits right now as we see, with the use of e-Cheque. Issuing banks. There are 10 as of 25th of November this year, and this is from the central clearing website. And you can see that these banks includes both banks from Hong Kong, from mainland China, overseas banks, and so on. So it's a great variety of banks participate in that, and we expect the numbers to grow as it's become more popular. Cross-border usage. After we had this e-Cheque launched in Hong Kong, 6 months after that, towards the middle of July, there was a joint agreement. The system went up. There was a joint agreement between Hong Kong and Guangdong to enable users, or rather companies in mainland China, being able to receive checks from payers in Hong Kong. Now that's in a sense facilitating cross-border business. And that is a collaborative effort between the Hong Kong MA, the Guangdong branch, and the Shenzhen central sub-branch of the People's Bank of China to enhance efficiency of cross-border payment. Now, it is important to note that while Hong Kong is part of China, we are under this, what we call one country, two system mechanism. The legal infrastructure is actually quite different. And therefore, the use of checks for cross-border payment is actually one way. So mainland Chinese companies receiving checks drawn by entities in Hong Kong, individuals in Hong Kong, on a Hong Kong bank, lodged in the mainland China and clear through the system. So it is actually, in a sense, a one-way mechanism. We are at this point in time, not getting kind of payments drawn by mainland companies on their mainland accounts and cleared in Hong Kong. Hopefully that day will come. So right now, 22 banks in the Guangdong Free Trade Zone and 28 banks in Shenzhen now allows their customers, corporate customers, to deposit checks, e-Cheques, drawn by Hong Kong, payers, again, different currencies. Is settlement next business day, benefits, reduced delivery time, enable online issuance and deposit anytime, anywhere, enhance security, and you actually are not killing trees anymore. So that is what we have, in a sense, make it possible. Now, the interesting thing, why Guangdong? Why just Guangdong and not the whole of China? As I mentioned earlier, because there was legal differences between Hong Kong and the Guangdong province, we had an agreement called the CIPA agreement, which is closer economic cooperation between Hong Kong and Guangdong. And that agreement was signed long time ago, and under that particular framework, an addendum was signed towards the end of 2008 to facilitate cross-border trade. And one of the projects arising from that was the mutual recognition of signatures and certificates between Hong Kong CAs and Guangdong CAs. And so that mechanism that was built around 2012 made all this possible. And as of this point in time, Guangdong and Hong Kong are the only two locations where this mutual recognition of certificates and signatures actually works. And that is what made this possible. And so you cannot, with all the kind of innovation, you can't say, well, let's put something in. Whatever you put in need to be aligned with the local jurisdiction. And in this case, you are looking at two legal jurisdictions. And so some work needs to be done to make it possible. In this particular case, with the mutual recognition, and because at that time it was a pilot, there were some arrangements on the China side where they are basically saying, certain parts of our banking law and certain parts of our electronic signature law would not apply, against these Hong Kong, Guangdong kind of a two-way, the recognition aspect. Some of the law will basically push aside to make this possible. So we are actually benefiting from that arrangement. So that was a brief overview on the e-Cheque, which is a relatively young baby, and we hope to see that grow in the coming year. The next component is EID. EID is something that a lot of countries around the world are looking into and have some mechanism in place to drive that. Again, it's a very interesting aspect because the name is the same, the substance may vary from country to country. And so in the case of China, it is an EID, then the definition of that is a government-issued electronic identity for online identification only. So it was intended purely to support online identity verification. In some countries, you can use that, offline, but this particular mechanism is purely online. It's authoritative in the sense that it is sponsored by the Public Security Bureau, which looks after all the citizen records. It is secure in the sense that it is based on a hardware crypto token and protected via PKI. Universal in the sense that it can apply to different scenarios for multiple applications, and that is what it's designed to do. And privacy. The EID is not a kind of a encrypted result of your ID card. It actually has some mechanism behind that so that you provide your ID and deriving from that ID is essentially a calculated value, a bit like a digital hash, really. It's a one-way calculation, but you can't reverse, to work out your ID card number. So some design actually gone into that to make sure that it is maintain a certain degree of privacy, and also when you actually use it, you are, in a sense, the challenging response, it varies every time. And so, again, making it less easy for someone to track your activities, because if your challenging response answer is the same every time, that ID, again, can be used for matching and to discover your let's say, purchasing pattern and so on. So that mechanism in terms of challenge and response on the authentication side, once it gets into application, is also kind of designed in such a way to protect individuals' privacy. So that is some of the design concept behind the EID at the time that it was launched. Right now, the project is still in is what we call the pilot phase. So how does it work? It actually built upon the banking and finance sector. It is right now hooked up to the banking industry and using your bank card as a medium for the EID. So with an applicant send an application, and right now it's an issuing bank. The bank passed identity information to the Security Bureau's EID Center, which is checked against the citizen register. And that was actually quite similar to the Nordic example, where you actually have a citizen register somewhere at the background. Once the checking is passed, the certificate is actually generated by the Security Bureau, so giving that the authenticity of the mechanism, of the status of the certificate, it is then loaded onto the token by the issuing bank and pass on the EID to the customer. So on your normal bank card, you actually have an extra chip, which is an NFC chip that goes with your your ATM card, and because it's NFC, you can just use it on a device, just touch it, and you can actually complete the authentication process and the signing. So that was the key process behind the issuance of the EID, and right now the pilot is linking that with the commercial banking side. A number of banks are participating in this pilot and issuing a fair number of these certificates to the end users. Now, interestingly, I would say most individual in this room has more than one bank account with more than one bank. So what happens then, under this particular we thought of that, and the idea is you only have one, in a sense, master account that can actually have this EID. So if you have two bank accounts, you can't go to your bank, the second bank, and say, I want to apply for an EID. If you were to do that, then your first EID would be voided, so that you can only have one valid and live ID in use at any one point in time. And that is the important aspect. Make sure that you also only have one valid ID to use. Cross-border usage. Well, you have this wonderful thing, you have to make use of it, and one of the most important and interesting aspect is that, last month or 2 months ago, or last month, I'm forgetting my time, allows to use an announcement was made by the Hong Kong securities industry regulator, Hong Kong SFC, to allow use of overseas certification authority to facilitate cross-border accounts opening. Now this is, again, it was mentioned earlier, this is the onboarding, the KYC component. And right now, you have to be physically present, you have to show your passport and so on for opening an account. And in the case of a valid certificate, you are able to facilitate the cross-border account opening. The code of conduct, basically the SFC's current code of conduct for the securities industry, allows certification services that are recognized by the Hong Kong's ETO for client identity validation. So that mechanism is already there. Now, what is on top of that is applicable only to certification authority outside Hong Kong whose signatures, certificates, are recognized, have obtained that mutual recognition status accepted by the Hong Kong government. And that was what I mentioned earlier, the mutual recognition between Hong Kong and Guangdong that was put into effect around 2012. Now, that mechanism, again, was used to make cross-border transactions possible because under that scheme, both on the mainland side and on the Hong Kong side, the regulators, respective regulators, maintain a list of recognized certification authorities who participated in the mutual recognition scheme. And if you are on that register, then you can actually, your signatures certificate can be recognized across border. And once you are within that particular group, your signatures generated by these signing certificates will have the same legal status, recognized under the Hong Kong digital signature legislation. So intermediaries onboarding clients online can also allow clients to use these certificates to create electronic signatures in executing client agreements, and that means you don't have to be physically in Hong Kong to start trading. All these instructions, client agreements, and so on, potentially can be conducted online. And so that is, again, a very interesting application of EID, working alongside a mainland CA who conforms to this mutual recognition framework, and you can actually conduct business cross-border. So with those two examples, there's one theme underlying that, which is the mutual recognition component. And we actually built it. I was part of the team that developed that standard. That was back in 2012. And what we were looking at that time was in fact a digital trust ecosystem. Again, the word ecosystem was mentioned several times today. And really that is the key. You can't, this is not about technology. This is not about solutions. This is about building the entire infrastructure around everything to make it work. And so with the digital trust ecosystem, you actually have the consumers, the industry, the service providers, and various partners that has to address the legal, regulatory, and other aspects. And that was what we did. So going back to the EID, you can see that it is linked to the official identity. It is separate in form to the national ID card. It leverages national CAs and the financial services institutions. It is contactless, and these are the key participants. It's not just one entity, that there are multiple service providers and participants within this ecosystem. So just an example, you can see that in terms of the way that the EID works, it is actually involve lots of different parties. And with the cross-border component, it actually has to have the support of regulators, both sides, within the respective territories. So that was what made it possible. We have also broken down to identity service provider and an operator, financial institutions, and the official issuance and maintenance, by the kind of security bureau. So all the parties work together to make this possible. Now, what was the role of CAs, and how did we actually make it all work? We had this mutual recognition framework around 2012, and it was constructed based on the principle that the prevailing legal framework in the two respective territories, being Mainland China and Hong Kong, will need to be complied with. And you have the Mainland CA on the one side, the Hong Kong CA on the other. There are principles in terms of your policy, your operating processes, some of the technology aspect, in terms of the strength of crypto, the key length, and various other aspects, the commercial arrangements, that underlying all that, and various regulatory supervision and safeguard mechanism to make this all work. So just building that mutual recognition framework took us the best part of a year, negotiating with the respective regulators across the two territories, and eventually they endorse it and make it work. And one of the these are some of the guiding principles. For example, the signatures will have legal effect. If you don't have that, it's a waste of time. So both sides, in terms of legal framework, we are aligned with that. Leverage existing policies over CAs and certificates. So both on the Mainland, on the Hong Kong side, you actually, the laws, respective laws require CA to go through some annual assessments and so on. So all that was actually used and leveraged to make sure that the framework actually stands up. Mutually agreed standard conditions, and CAs can choose to participate or not. It is not a mandatory thing, so it allows CAs to make their own choice in terms of whether they want to participate in the mutual recognition framework. Aim is strengthening trust, and relying parties still bear the risk of the transaction, which is understandable. And then does not exclude other means of mutual or cross recognition because it's a commercial decision. The core component is a set of standards that CA providers need to conform with. There's a framework endorsed by the regulator, and provide the infrastructure, and there is arrangements and processes established for an ongoing operation. So for example, I mentioned the 2 lists of CAs that was maintained by the respective regulators. So if something should happen to a particular CA, now for argument's sake, it gone out of business. And so there has to be a mechanism to notify the other side, and the regulators now need to step in and say, publicize this fact to make sure that the infrastructure remains robust and trustworthy. So the ongoing safeguard mechanism is not a technical, it's not just a technical component, there are also administrative and the regulatory side that comes into play. And what we have in terms of the overall framework, we have a set of policy, practices and disclosures as aim for CAs, and is incorporated into their respective CPs and CPSs. A lot of the operational procedures in terms of life cycle management and so on need to be aligned, making sure that they are of a kind of comparable trust level. The technology aspects, you know, the fact is the mainland operator and on Hong Kong side actually have 2 different sets of technology solutions. And so that has to be brought into alignment one way or the other, the commercial arrangements and regulatory supervision. So it's not just about technology, it is about everybody working together to make it all possible. What are the ongoing safeguard mechanisms? The communication cooperation between the 2 regulators, making announcements, education, and the you know, regular meetings, make sure that the framework is robust and up to date, notification and response in case something goes wrong. So all of that is actually written into the agreement, and both sides actually sign up to that. And without that understanding, it's actually going to be quite tricky to make it sustainable and work. And this is, you know, really requires the support of the 2 sides. Now, you take that one step forward. Take that one step forward. Right now, we are in a situation where we only have 2 regulators. Technically, theoretically, it will actually work if you have 3 or 4 or 5. A lot of the commonalities of this, you know, at the principal level is actually going to be very similar indeed. It's just finding that common ground and make sure that the framework actually you know, is going to work. So with the experience that we have, we are now in a very interesting situation. As more and more territories got into EID and trade becomes more and more global, will this experience and you know, what we have learned between Hong Kong and China, and can it be actually applied to other territories? And my own view is entirely possible, because as we heard this morning, there are a lot of similarities between some of the schemes that is currently, you know, in play within different territories, you know, as far off as the Nordic countries. There are a number of the service providers that are actually supporting and maintaining the infrastructure. So linking those together and aligning some of the practices is entirely possible. And so we are looking forward potentially to even extend the scope of mutual recognition you know, with more and more territories in that sense. I remember when I first started, we built our law against the unsocial model e-commerce law. So at that time, most countries actually referenced to that, and a lot of the digital signature legislation have actually a high degree of commonalities and making cross-border mutual recognition a reality today. So it is actually, you know, very encouraged by what has happened, you know, in the last several years to get us this far. and having started way back in the late 90s, some 20 years later, we got to a situation where we can really see PKI being put into use to support cross-border trade is actually very exciting indeed. So, normally, I would invite questions, but probably, given the time, I'll stop here. And thank you very much today. You have been a great audience, and if you have any questions, feel free to connect with me, and that's my email address. Thank you very much.
And that was Mr. William Gee. Thank you very much for such a very inspiring case study. Thanks for sharing us today. Ladies and gentlemen, our next session will be the last session of the morning session before lunch. And